Hello there. Welcome to Introductory to Accounting L4. We are still working on our question paper, a past exam paper from June 2023. This was question 7 from that question paper. And this question is on bank reconciliation. We want to go through this question and answer what follows. So on bank reconciliation, what is important to know is that we have got two documents that we are comparing. That we want to prepare reconciliation. We've got a bank account in our ledger, in our books as a business, and then also have a bank statement that represents also the bank account in our ledger. So a bank statement is an external document that comes from the bank, as they are the ones that are holding our account. So you'd see that we have two sides, that is the debit and credit. So what is on the debit of our bank account in the ledger should be on the credit of our bank statement, and the opposite is true. So what is important to know is that whenever money is deposited in our bank account, we debit it in our ledger as we open our bank account in our ledger, and then the bank will credit it in the bank statement. So that's what we have. So if you come here, we would see that this is the scenario that we have, whereby we are having a bank account in our ledger, and we have got the debit and credit side, and also we have got the bank statement where we have the debit and credit. And so what is on the debit side of the bank account in our ledger here should be on the credit of the bank statement. They should be the same things, because these two accounts represents this similar transactions. So transactions that are entered in the bank account in the ledger are the same transactions that we are going to see in the bank statement in the bank statement again. So that's why we prepare the bank reconciliation whenever there's a difference between the balance that we have in the bank account in the ledger and the balance that is on the bank statement. Whenever we have a differential, then there's a requirement for us to prepare a reconciliation whereby we are trying to reconcile the two balances. So that's what the scenario that we have there. And also what is important to know is that whenever we receive money as a business, be it money has been deposited in our bank account, we are supposed to debit it in the bank account in the ledger, but in the bank statement they credit it. And then whenever money we make a payment in terms of checks, we prepare a check for a payment, we organize for a standing order. What we are supposed to do is we are supposed to credit that amount in the bank account in the ledger to represent that money is going out of business. But in the bank statement, that amount is going to be debited. So what is on the debit side of the bank statement should be on the credit side of the bank account. So that's what the scenario that we have in terms of bank account in the ledger and then with the bank statement. So if you go back to our question, the question reads: the following information appeared in the books of Muklish traders on 31 May 2021. Then the first part there, we are given the bank statement has already been compared with the cash receipts journal as well as the cash payment journal, and the supplementary entries have been made in the mentioned cash journals for May 2021. Then on 7.2, the bank account in the general ledger of Muklish traders showed an unfavorable balance of 12,970. So what does it mean? When it's unfavorable, it means this balance is a negative balance. Since it's unfavorable, we are going to have a negative 12,970 as a balance. This is a negative. Then our 7.3, the total of the bank column in the cash receipts journal is 269,000 rands. And then our 7.4, the total of the bank column in the cash payment journal is 365,000 rands. So these balances are from here to here. They are representing the bank account balance in our ledger. So this is the balance that we are going to compare with the bank reconciliation balance. They should be the same. So here, that's where we are going to calculate the bank account balance in our ledger. So we are told that cash receipts journal is 269. So when it's cash receipts, it's a positive, and then when it's on the cash payments, it's a negative balance, because on cash receipts we are receiving money, so it's a positive. On the cash payments, we are making some payments, money is going out of business, so it's a negative balance. So to get the balance there, now we are saying positive 269,000 thousand. Then we subtract the negative balance, which is 365. And then the answer that we are going to get there, we add it to negative 12,000. We are going to subtract again negative 12,970, so that we get the integrated balance now of the cash of the bank account in our ledger. So if you subtract here 269,000 minus 365,000, here you are going to get negative 96,000. 96,000. Then obviously we are going to add it to the balance that we have there for the bank account. So here we are having a negative, so we are not going to add, we are going to subtract again. So we say minus again here the balance that we have here, 12,970. If it was a positive, we are just going to add there to that figure that we have, but we have a negative figure there, so then we subtract there. So if you say minus 96,000 minus 12,970, you are going to get a negative 108,970. So this is the balance that we are going to compare with after preparing the bank reconciliation. We are going to compare with this balance. It should be the same with this balance to see that we have prepared our bank reconciliation correctly. So beneath that now, we are given the following checks did not appear on the bank statement. So these are the checks that are there. They are not there on the bank statement. So what it means is these checks are there in the bank account in our ledger, but they are not on the bank statement. So we need to put them in the bank reconciliation since they are missing on the bank statement. And then on 7.6, we've got a deposit of 19,694 made by Muklis Traders on 31 May 2021. Did not appear on the bank statement. Remember, whenever there's a deposit, it's money that is coming into the business. And remember, on the bank statement, when we are having money getting into our account, we credit the bank statement. So we are going to reconcile as such. Then we have 7.7, where we are given the bank statement of Muklis Traders showed an unfavorable balance of 48,963. So this is the balance that we are going to start with in the bank reconciliation. This one is the balance that we are going to start with in the bank reconciliation, and then we are going to make some adjustments that we are given here. And then the final balance should be the same with this one, which is a negative 108,970. So this one is just there to compare if we have made a mistake in our reconciliation or not. If you get this figure, it means we have not made any mistake. So we go again, we have something that we have there on 7.8, there on 7.8, so we can go down to check. On 7.8, we have got some adjustments that are there up to the end. So we can start by, so the figure that we are going to start with is this one, 48,963. That is the opening balance, which is unfavorable. So we go to our bank reconciliation. Go to our bank reconciliation, and remember the question is beneath that. We can just recheck there in terms of the question that we have there. So the question is here, the question is saying prepare only the bank reconciliation. Very important here, prepare only the bank reconciliation statement for the month ending 31 May 2021. Do not prepare the cash receipts journal or the cash payment journal. So the question is clear. We only need the bank reconciliation. So we are going to start with this balance, 48,963, which is an unfavorable. When it's unfavorable, we know that it's on the debit side of the bank statement. It will be on the debit side on the bank statement. But on the bank account, if it's unfavorable, it's opposite to be on the credit side. So we go to our bank reconciliation. Yeah, so this is our opening balance. Then we say balance according to bank statements. Balance according to bank statements. This is the balance that we are starting with. Right. This is an unfavorable balance. So when it's unfavorable, it should be on the debit side. Remember, when you deposit the money, it should be on the credit. But when money is being withdrawn on the bank statement, it's shown on the debit. So unfavorable comes on the debit. So we have 48,963, 48,963 that we have there. Then if you come back to our adjustment that we have in the question, on 7.5, we are told that the following checks did not appear on the bank statement. And remember, these are the checks that were written as payments. So this is money that is going out of the business that was supposed to be recorded in the bank statement, but these are not, they are not there. So what we are going to do is they are supposed to be on the debit side of the bank statements, reducing the bank statement balance on the credit side. So we are going to list these checks there on the debit side. We have got check number 002 2,456. Then we have this one, check number 005 4,689. Then we've got check number 009, which is 3,265. And then we have check number 012, which is 2,750. That's what we have. Also, we are going to list all these checks there on the debit side of the bank reconciliation. So we come here, and we say outstanding checks. So we list the checks up beneath here. We have number, check number 002. And on check number 002, we have 2,456, remember? We put them on the debit, 2,456. And then also we have check number 005. We have 4,689. These are the checks that we have. We still have another one there where we have the check number 009. Then we have number 009, and then the figure that we have there is 3,265. 3,265. And then after that, now we have a check number 012. 012, which is 2,750. 2,750. So these are the checks that we have, and they should be on the debit side. They were supposed to be recorded, but they were not recorded. So when you go back to see other adjustments that we have a deposit on 7.6, a deposit of 19,694 made by Mukrish traders on 31 May 2021 did not appear on the bank statement for May 2021. So you can take note of the date. This is the very current date according to the period that we are preparing for. That is 31 May 2021. And this deposit is not appearing on the bank statement. So there is an allowance that that deposit is going to take place, and then it's along the way. So we are going to record it. Although it's not appearing on the bank statement, on the reconciliation, we are supposed to include it. So we've got 19,694. So this is also an outstanding deposit, So we come here, and here we say outstanding. Outstanding deposit. And remember, when it's a deposit, it's supposed to be on the credit side, and this was not even recorded, so it's supposed to be on the credit side. So we put it on the credit side, and we've got 19,694. 19,694. So that's what we have there, and then we'll try to see what we have there next. According to the question, we'll go back to the question to see other adjustments that are there. Right. Beneath that, we have got this is the bank statement balance that we started with. I will skip that one. Then we go to 7.8. The bank erroneously credited the amount of 79,560 to the bank statement of Muklish Traders. The bank disclosed that it was a deposit made by another client. You see, this is a mistake that had transpired. We credited the bank statement with 79,560, assuming that is the money that has been deposited in the in the bank account of Muklish traders, but this was an error, so we need to correct this error. And how do we correct it? It's on the credit side of the bank statement, so we correct it by going to the opposite side, that is, we debit it, so that to remove it. So that we go there, and then we enter that one, which is 79,560. Then this one, we can give a description of saying it's a credit bank error. It's a credit bank error. So remember, it was on the credit, so we are now going to the opposite so that we remove it on the debit now. 79,560. That's what we have there, and then we check if we have got any other adjustments that is there in the question. After this one, we have in May 2021, the bank statement of English traders showed a check number 30, check number 030 for 13,019. On inquiry, the bank indicated that it was for another client who instructed the bank to pay ESCOM. Right, you see now this is a payment that was there, so it means this amount was debited, but it was an error. It was not supposed to be debited in the account of Muklish traders. So what we are going to do is we are going to remove it again. It's on the debit side, so by removing it, you go to the opposite side, that is credit, and then we enter the amount on the credit. We have removed it. So that's what we are going to do. We are going to the credit now. It's on the debit. Here, it's a check number. When it's a check number, we know that it's something that has been deducted. So when it's deducted, it's on the debit side of the bank statement. And when you now removing it from the bank statement, you go to the opposite side, that is credit. So that's what we have there. We go to bank again. That one is a bank error. It's another bank error that we have. A bank error incorrectly. It was incorrectly debited. So we are now removing it, we are crediting it. So I will put it here, 18,019. So that's what we have there. So having done that, we check again to see if we've got another adjustment that we have. We can check. Right, this one seems to be the last one. So that's we've corrected all the errors that we have there. So we are going to balance at the account that the bank reconciliation, and the final balance that you are supposed to get should be a negative 108,970. When it's a negative, it means it should be a debit balance, a debit BT, and then the CD obviously will be on the credit side. So we go back there to try to see. So here, what we are going to do, we are going to add the total of the debit, and then we add the total of the credit. Add the total of the debit, and then we add the total of the credit. So if you add the debit side, you are going to see that if you add the debit side, we are going to see that the total that we are going to get for the debit side there, it's 141,000. 141. This is the debit side. 141,683. This is the total for the debit. And then for the total for the credit, you add the ones that we have there. We're seeing we are having only two figures that are there. 19,694, and then we add 13,090. Let's try to add that one. 19,694, and then we add 13,019, and then we get 32,713. 32,713. So 32,713 is the total of the credit side. 32. So the credit is 32. 32,730. Right. So these are the totals that we have. So we are now seeing that the debit is the bigger side. So if it's the bigger side, it comes on the in between the double lines there. In between the double lines. So this total for the debit, the greater total will come in between the double lines, which is 141,683. 141,683. The same thing happens here. We put on both sides the bigger total, and then we find the difference between the two totals. That's the next step when you're trying to balance this account. So we now say 141,000. 141,683. Then we subtracted 2,713. So when you do that, you're supposed to get 108. There, you get 108,970. 108,970. So this is the difference between the two sides. And, and this difference should go to the side with the smaller side, and the smaller side, we know that is the credit side. So this figure, we put it on the side that we have the smallest total. So we put it there. The smaller total is on the credit side, so it's going to come here. So we are saying now here we have 108,970. So that's what we have there. So you come here. You come here now on the description of this figure that we have. This is now the credit balance as per bank account. Remember, this is the bank account balance that we calculated there. So this one is now the credit balance, the credit balance as per bank account. As per bank account. Right, it's a credit balance of the bank account. So what it means is on the bank account, it's a credit balance, but on the bank statement, it's a debit balance. And remember, this is on the credit as a CD, as a BD to be here on the debit side. So on the bank state, on the bank reconciliation here, we are saying it's a debit balance, but on the bank account, it will be a credit balance. So this is the figure that we are saying should be the same with the figure that we have given in the question there, 108,970. So if you go back to the question, 108,970, this is the figure that we calculated here, 108,907 as a negative balance, meaning that it's a debit balance on the bank reconciliation. And it's shown that on the bank reconciliation that we have prepared, it's a debit. It's on the credit side as a CD, but as a BD, it comes here as a debit balance. So what counts is the BD that determines which balance is it. The BD will go on the debit, so it's a debit balance, meaning it's a negative balance. So that's what we have in terms of the bank reconciliation question that was on June 2023. Thank you for listening. Stay tuned for more videos to come as we prepare for exams. Those who haven't subscribed, please subscribe so that you get notification for videos that are going to come that might assist us in the exam that we are going to write very soon. Wish you the best in your studies. With that, I'm signing out.